Good day to one and all. This is Dr. Sivaraman of IKnowIndices.com. Hope you are able to hear me. Let me display the PowerPoint presentation. Tracking the forex market together part 1 on July 15th between 9 and 9:45 GMT. So we will be tracking the market together using the live market code page. I have given the link for the same. I will also focus the camera over that of the live market code page. So now you should be able to see where the currencies are being traded. So Euro is trading around 1.4134, 1.4136, 1.4096 is the low, 1.4198 is the high, almost about 100 pips. It has made the drop from that of the high, and you find a net change of 7 pips. That means after closing yesterday US session, they made a quick rise to 41.98 and then came down and breached the initial low also. Currently showing 7 pips negative net change, and that means 7 pips lower than that of yesterday US session close. Yesterday US session close was around 1.4140 area, and GBP is currently trading around 1.6085 and 1.6090. 1.6087 is the low, 1.6174 is the high. Again here you find about 100 pips spread, and they quickly gained the level and dropped, but they dropped about 50 pips in the case of GBP. That means from the higher level they made a nominal rise, and then from that of that yesterday's close level they made the drop of about 50 pips. So yesterday's close level is 50 pips higher than that of 1.6087. That is what it implies as the net change. Then in the case of yen, it is hovering around that of 78-79 area, currently trading around 78.22, 79.22, 79.25, 78.90 is the low, 79.25 is the high. 10 pips positive net change is seen. So yesterday many were anticipating that BOJ might go in for an intervention, but it has not happened that way. They went up to 49.50 and then came down, 79.50 and came down and formed the low for today, 78.90. 79.22 it is trading around after the downward stop, and for weekend they are expected to gain the levels in the case of denominator currencies. And in the case of denominator currencies, since they are showing the multi-year lows and they are just discouraging anybody who is trying to do a buy and sell trade, that normally happens whenever they are in the extreme level. Then in the case of CHF, 0.8176, 0.8179 are the current levels, 8122 is the low. From there they gain the level, and the 81.84 is the high. 17 pips positive net change is seen. That means from that of yesterday's close it has gained about 17 pips. So you find the majors are showing the USD gaining move. But coming to that of the commodity pairs, that USD CAD is trading with a nominal negative net change of almost about 1 pip, and Australian dollar is trading around 76 pips negative net change. When both the currencies are in negative net change, you know that they are doing a contrarian move in order to handle the respective crosses. So you find Canadian dollar is trading around 0.96039607, 9590 is the low, 9622 is the high. The spread is very nominal. And Australian dollar, after trading around 1.07 yesterday, and almost it was showing that impression that it could go to 1.08, but they came down to 1.06. So basically yesterday they made this stress test for that of the traders. So just to gain the levels and see whether the traders have got the capacity to withstand such pressure, and subsequently, and whoever is weak-minded, they just induce them to do the short covering, and afterwards they continued the drop. And today you come across by 16 GMT that European Bank stress test is expected to be announced. The results are to be announced, and the market is expected to, I do not know the outcome of the result, but the market is expected to make a drop during the US session. So that is what I explained in the blog. Now, as far as the commodity pairs are concerned, they are showing the negative net changes, that Australian dollar about 77 pips and Canadian dollar about 1 pip. So that means they are handling the crosses, so it is ideal to take positions in crosses as a small swing trade. So let us compare this particular thing with that of initial lows and the highs set for today, so that we will have an idea where exactly they are holding the market currently. Because you know that every day I do that Asian session live market analysis webinar. At that time, I note down the initial lows and the highs of the respective currencies of the 4 majors and 2 commodity pairs, and you can make a comparison of it. Then yesterday they went up to 42.81, and that was the Monday high, almost close to that, and afterwards made the drop 42.81, and then made the drop to 41.40, and you find that 41.66 was yesterday's low. They are still holding and holding below that of 41.40 currently. So 41.32, 41.34 are the current levels. They are attempted to make a small gain above that of 41.40, and so as you know that when they breach the initial low and stay below there for more than 30 minutes, then we can do a technical trade of sell below that of the low and buy during further drop. And in the case of GBP 1.6135 is the low which is set around 3:30 GMT, and still it is trading below that. So any small pullback around that of 61.30 or 61.35, we can take a sell position. And high is not been breached at all. And in the case of CHF, 81.61 was the initial low, and then subsequently they formed 81.84, 81.73, 76 on the current levels. And when it comes closer to that 81.61 or 81.65, we can initiate a buy position. Once you refer it to that of the initial lows and the highs, it will be easy for us to take a trading decision whether we are going to do a swing trade, either sell near that of the high and buy near that of the low, or buy near that of the low and close it near that of the high, or a technical trade wherein we sell above that, we buy above that of the high, or sell below that of the low, initial lows which are set, and they are being used as the reference levels by that of the players. So we also try to use the same so that we are able to read their intentions as much as possible. Still, we may not be able to read 100% their intentions, but to a certain extent we can read it, and because whatever being the hidden agenda of the players, they have to disclose it in the market by making the moves. And in case our reading goes wrong, then we need to have a trading strategy to limit the risk, because money management is totally different from that of forecast. So forecast can say that market can come down, but if we simply take a position when the market goes against, we cannot simply blink and watch it. We have to necessarily take precautions of using the hedging or a stop to limit the risk and try to re-enter into the market in case we are using a stop. That's what I was advising many of the traders yesterday in gold when they have been making a panic rise and they are afraid. So I asked them to just close the position and see what happens to that of the market, and they booked loss and subsequently re-enter at a higher level. So what happened then afterwards, they started making the drop when they are comfortable. So that is the way one has to view the market, and if you become jittery, then nothing will work. Then Australian dollar, 1.0719 is the initial low. They have reached far away from there and formed 1.0630 and currently trading around 1.0653 and about 69 pips negative net change is seen. So you know that the commodity pairs lead the rally and lag behind, and they are just leading the rally on the downside. Then case of Canadian, 1.6590 is the low, 1.9590 is the low, 1.9604 is the high, and they breached the high and formed 9622, and still you come across about 5 pips negative net change. In order to handle the crosses afterwards, they are expected to make a gain. So since the spread between the low and the high is less than 40-45 pips, it is better avoid taking position in such currencies. So this I just made use of the initial lows and the highs for you to make a note of on a daily basis around 3:30 GMT. Then that will be really helpful for you to understand where they are taking the market, and you will be able to relate it to that of the previous days and understand And many are questioning, on Monday they made a drop and Tuesday onwards they made the rise. And many were questioning whether Monday drop was the weak beginning false move. Now you come across that they are trading below that of yesterday's low. And that shows that Monday drop was not the weak beginning false move. Monday rise was a weak beginning false move. But I was anticipating the shift in trading zone on the downside. And for that, one of the precondition is the non-trading zone should not be revisited. So 1.4188 to 1.4293, and they are not supposed to trade in that particular level, only then further drop can come. But yesterday they visited it. So the downside is limited in the case of euro. Probably they may come to about 1.3850, the earlier low, or slightly lower than that during a downward stop, but not a very big drop is expected. So next week, you have the chance for it to come down, then we will review the market again. So let me minimize the PowerPoint presentation and come back to that of the tracking the forex market together with PowerPoint presentation. So in order to understand the players' intentions and the session-wise moves, we need to know the session timings which are followed by that of the players. This is not my own session timings. They are all the timings followed by that of the players. That is how they do it. And in between the sessions, you come across a gap time during which the banks are not supposed to place their big orders, the currency conversion orders, and because of the natural phenomenon, some banks in certain regions gets over, and certain other banks in other region open it after 30 minutes. That 30 minutes gap is being used by the other players in order to get the false move. So gap time moves are considered as a false move. Then 7:30 to 13 GMT is the European session. Now we are in the European session. 1.5 hours is over. 9 GMT we have started. So first 1.5 hours is the early session. Now we are in the middle session. So early session and the late sessions, they handle the majors, and mid session they handle the cross. So you will come across more activity in the case of the crosses. So my basic trading ideas, I explained it in my trading system webinars, but briefly I recollect that we track the market using the GMT time and also the session times what I have shown in the earlier slide. You come across the gap time, session start, mid session and late session, and we track the market using the Saxo Bank Interbank Treasury Live Market Quote page, and then we refer always the market to that of the initial high and initial low and also the net change. So to find out how exactly they are situated, they are placed in the market, whether it is on the downside or on the upside, so that will help us to take trading decisions. So they breach the low in the case of euro, they breach the low, initial low in the case of the GBP, then this fundamental trading will not work. That is, identify the currency which has made the spread of 40 to 50 pips. So only when there is a spread between the high and the low is more than 40-50 pips, you can enter into this currencies. If it is less, like Canadian dollar for example, or like yen, then it is not advisable to take positions in such currencies, because within the safe session we may not be able to book profit. Ultimately we are interested in making profit and no sentimental attachment to any currency pair. Then entry decision. Within a session we make a buy near that of the low or sell near that of the high when the high or the low are not breached for 30 minutes from the start of the session. So now in the European session they breached the low, and currently euro is trading around 41.40, 41.42, and I showed you that 41.40 was the initial low. They have just come one pip above for the mid session, but it is nowhere near that of the high. But still there is a technical trade possibility, because euro they are making a small gain when GBP is not gaining, in order to handle euro GBP cross. Euro GBP they are just making a small firming up move, and it is showing about 21 pips positive net change and trading around 87, 81, 87, 84. So that is how we have to refer it to that of the respective crosses when they show small pullbacks and things like that. Identify which currency they are trying to handle, then try to take positions in those currencies. Then Once you take the position, keep 30 pips stop or the hedging order to limit the risk. At a given time, you can afford to take 30 pips risk, but not unlimited risk. Because many of the traders have got the tendency to avoid keeping stop, because most of the trading platform, they make the local stop-ins for their traders. But that is unavoidable. So only thing is you can give about 30-35 pips stop or the hedging order in case the hedging facility is available. So that if it is hedged, we can review the hedging and see whether it has filled during stop and or during the extended move, and accordingly we can handle the position. Then exit. Similarly, when you are taking a sell position near the high, near the low, we'll exit, or when you are taking a buy position near the low, we'll try to exit near that of the high. The spread is given, and definitely they are expected to revisit those levels during the day. Then use stop to limit the risk, and also keep stop at entry once the position makes about 20-25 pips profit, and so that the risk is eliminated. Subsequently, you maximize that profit by trailing the stop and keep a limit in the opposite direction. For a buy, you keep near that of the high limit, and for the sell position, try to keep a limit near that of the low. You can move away the limit away from that of the market when the going is good, but not the stop. Then entry and exit can be fine-tuned by keeping a limit order rather than a spot market position. Suppose currently Euro is trading around 41.41 and we want to immediately enter it. Rather than that, you can just keep about 5 to 10 pips away, 41.50 or 41.49 and things like that, and see whether they are filling it in about 10 to 15 minutes. If they are not filling it, then later on you can take market order. Because normally when you take the market position, sometimes the market may go up about 3, 4, 5 pips, because market means swings. They have to make up and down moves in order to attract the traders. So during that time, you can fine tune and enter at a better rate. That is why you keep always a limit order so that you will get a definite fill, and some of the platforms, they give the slippage. If you go in for the market order, there again the limit order will help you. Then avoid impulsive decision. First of all, you have to control your emotions. You should not become afraid of the market, and that is the only weakness of the traders. When they become afraid of the market, the players easily make them to lose money. So if you are not afraid of the market, how it is possible? By taking very less position for an adequate equity, so that even if they make some extreme moves, still when you are trading without a stop also, there won't be any big threat to that of the equity, and that way it will automatically control your emotions. Now you come across in the case of Euro and GBP a situation wherein the high or the low are breached. So now the initial low has been breached in the case of Euro, and they are trying to come above that of the initial low. So when they come above that of the initial low, 1.4140, currently trading around 1.414749, and above that of the initial low, if they sustain for more than 30 minutes, then they can make a pullback. Don't immediately take a technical trade, and they can make a pullback up to that of the high or to that of the middle level. So watch such moves and then try to take the positions. Don't be in a hurry in taking position. Spend more time in understanding the market, and when a right opportunity comes, enter into that of the market. That will give you a real benefit. Then in case if they are making an extended move, like a downward move below that of the initial low, wait for 2 hours, and then the extended move will get over. Then afterwards they will stop cutting the new low or the new high. Then near that of the new low, you can take a buy also. So just notice that 1.4096, they formed it during that of the gap time and also the early part of the European session. Afterwards, for 30 minutes, they are not cut it. Now slowly they are gaining the levels. In the case of Euro, wait for them to sustain up to about 9:30, 9:45 GMT. Then afterwards take a sell position when they are not showing new high. So this is important with regard to when they breach the initial low or the initial high. So rather than going for many of the type of technical analysis, or you can use it as an additional type of analysis in your own methods, so that whatever the players are using as the initial low and the high, you can use the same. So understand how they intend to make the moves in the market. Basically, the players create the market sentiment and act against that of the traders. So like yesterday, they created the bullish feel and acted against that of the traders when they have done the short covering, and then turn long, the players have started making the slide. Probably you may say that it's because of that stress test, the market is coming down. So all things may be used as an attribute. I do not know whether they are really attributes or the facts, but the thing is, the players have got their own agenda of trapping the traders. So we need to understand it. So for that, I use the algorithm, I use the market reading as well as the trading strategy. Combining all these three, we will be in a position to wisely monitor our positions and do the money management effectively. At the same time, try to earn from that of volatility of the market. So we are not afraid of the volatility of the market. We identify it as a great trading opportunity, because if they make only a 10-12 pips move throughout the day, there is no big opportunity of booking profit. Whereas if they make about 100-150 pips, then if you are in the right direction, we will be in a position to really capture big money from that of the market. So you have to calmly wait for such opportunity. When the market is stagnant, don't try to enter into that of the market, because you will be simply holding the position. Instead, when the market becomes very active, try to take position quickly. You will be able to see profit. Now, with regard to the positions for the European session, based on my explanation, you come across that Euro has just gained above that of the initial low 1.4140 and staying above 1.4145. So, in first 30 minutes of the session start, they are not breached the high. So we have the assumption that they will not breach the high throughout the session. So they are trying to come to that of the middle level, 1.4150, the psychological level. So we keep a sell limit order 1.4149, just one pip below that of the psychological level, because they may show the psychological level 1.4151 or 52 like that, but our platform may not fill it, because there is a spread between the bid and the ask. So 1.4149, just one pip below that of the psychological level, 41.50. I'm keeping the sell limit order and a stop of 30 pips. So Euro has breached the initial low and come above, and they may make a small gain, and they made a gain up to 41.50. They showed the bid 41.50. But they have come to about 41.45 now. Let us see whether they are filling it. In case if they are not filling it for 10 to 15 minutes, then we will modify and try to keep one pip above the market so that they may give a definite fill on that. So we will not try to take a market position. Then GBP, it is trading around 1.61 or 6099, and it is quite far away from that of the initial low, and also it is closer to the low. So we are not going to take any position here unless and otherwise a small pullback happens, because you come across 2 pips positive net change in the case of Euro, or 3 pips positive net change in the case of Euro, and 38 pips negative net change in the case of GBP. This is mainly to handle Euro GBP. They are trying to gain the levels in the case of Euro GBP. Earlier it was around 21 pips positive net change. Now it has come to about 23 pips positive net change. It is a mid-session, so we will try to take a position. In the case of Euro GBP, 8784 with a stop of 50 pips. In the case of crosses, the volatility is very high because of lesser volume, and also the spread is more. So we will try to take positions and keep 50 pip stop in the case of crosses. So now we identified that they are trying to handle Euro GBP. That is why Euro is showing positive net change, GBP is showing negative net change. Let GBP come up, then afterwards we will try to take position. Now in the case of CHF, 0.8166 is the current level, and we are seeing that 0.8163, let me show that particular slide, the initial low 0.8161 is the low. In the case of GBP 61.35, around 61.30 we will try to take a sell position. Here 81.61 is the low and currently trading around 81.66. So let me go back to this, our slide. So GBP will keep a sell limit. So 61.34, 1 pip below that of the initial low, will keep a sell limit and 30 pips stop. And in the case of CHF, we will try to take a buy position, buy limit 8163 and see whether they are filling it, otherwise we'll modify and keep it. Now our euro position is filled, it becomes a position. Then 8163 they are not coming in. Currently 8166, 8169, let us see. And afterwards keep stop 30 pips. And in the case of yen, the spread is very limited, so we are not trying to take that position. In the case of Australian dollar, and currently it is trading around 1.0660, 1.0663, 1.0630 is the low, and our initial high was 1.0710, so we will not take a position there because it is nowhere near that of the initial low or near that of the new low. If it is near that of the new low, we can take a buy. If it is near that of the initial low, we can take a sell, but it is in between. So when they let them make a small pullback later on, we can. And in the case of Canadian dollar, the spread is very limited now. Still they are trading around 95.89, 95.93, 95.90 is the low, and currently they are doing a negative exchange. So we'll try to take a buy, triple buy limit order. Because whenever they make the contrarian move, the downside will be very limited. So we'll try to keep 95.90 as the limit order. Probably they may just drop about 10-12 pips from there and make a stop and go up. So we will try to take a chance there. We can also watch and take the position. Otherwise keep a limit order around that of the low and see whether they are giving a definite fill on that. Still we are only taking 30 pips stop chance. Okay. So with regard to the yen crosses, yen is making subdued move. Whatever the position we take in euro and GBP, similar moves could be seen in the case of Euro yen and GBP yen. Sorry. So we will not take any position there because the spread is very limited now currently in the case of the yen crosses. Then Euro CHF, another European cross which has been extremely moved nowadays, and currently it is trading around 1.1560, 1.1518 is the low. 20 pips positive net change is seen. No. Now it is not closer to that of the low because it's about 50 pips away from that of the low, and I forgot to note down the initial low, and it is closer to that of the high, so we will not try to enter into that Euro CHF now. So these are all the positions. Euro is the only position I have taken, and rest of the things are all limit orders and the sell position in the case of Euro GBP. These are all the two positions. Now I am holding it and I got the stop of 30 pips. So it will be 1.4179. So you can just watch, they are showing about 1.4155 and it is the mid session they are trying to swing. You could have watched and taken a better level position also. Doesn't matter, but we thought that they may come up to that of the psychological level and come down, but they are gone above it and they are staying above that of psychological level also now. But still, let us see whether they are holding it above that of the initial low for more than 30 minutes, and if they are not dropping it, and we will try to close the position and turn long and close near that of the high, and later on take a sell position or stopped out, then we will re-enter at a higher level. So we are prepared for either way moves of the market. We are willing to accept when the loss is small, but still we wanted to capture as much as profit as possible in our trades. So let me minimize the PowerPoint presentation, and if you want you can make a note of that positions, what I entered, how exactly the trading decisions are made. Then later on I'll answer to the questions which are asked here. I'll focus the camera over that of the live market code page and try to answer to that of the questions which are asked here. Then Robert, in technical trade, okay, SL below that of the low, for example, if they come back above that of the low and not dropped, we should close that with a minimal loss. Yes. So in a technical trade, say for example, in the case of euro 1.4140, we are trying to take a sell and we can keep a stop 1.4160. You would have been stopped out. Okay, in a technical trade. Then afterwards, we watch whether this stopped level 1.4160 is making profit. And if they go above that quickly, then they are supposed to go and breach the high within a matter of 30 minutes. If they don't breach the high in 30 minutes time, re-enter sell. And they will make a drop. Because this is a mid-session, so in order to handle the crosses, they just make a gain in the case of euro and not gained much in the case of GBP. You come across, it is a contrarian move. Euro is showing positive net change. GBP is showing negative net change. So we don't anticipate them to make a very big pullback here. And this is only to gain levels in the case of euro crosses. And afterwards they want to drop again. Then AL. What about orders? Do you see them on screen? I'm not able to understand. Do you see them on screen? What about the trading platform you try to place? So I'm not using any trading platform. I am just trying to give you a mock trade. Then Robert, is there a specific intent in the market facilitators to give us slippage and all platform problems? Okay, Rob. See, as far as the trading platforms are concerned, there are various types of trading platforms, and invariably you come across the problem lies either with the broker or with the bank. So the slippage, they can simply say that the market moved very quickly, we are helpless. And either the broker can say that if we is having a market maker platform, or the bank can say, and the platform provider may say that we have got a direct link to that of the bank, we don't interfere, we don't have any market making facility, but still the banks do that. So ultimately the slippage is the one which often happens in most of the platforms. Then M drive. So you are not expecting a big drop in euro. Now, since euro has gone above that of the initial high, it doesn't mean that our view is changed. Okay, because we identified that GBP is just making a negative net change, euro is making a nominal 14 pips positive net change, because the small swing they have to do necessarily in order to handle the crosses during the mid session also give that impression to the traders the market is alive. They cannot keep it like that. So 10-15 pip swing is not a big deal. In case if they breach the initial low and within 30 minutes go above that of the initial high, then they are expected to make an upward spike. Otherwise, it is only a small gain, and afterwards about 30 minutes or so, they will slowly come below that of the initial low. So from that of the initial low, they gained about 20 pips, 41.40 to 41.60. Afterwards, they are making the slip. Then M driver has got another question. The spread is very low on CHF. Why you are taking buy position? No, the spread is low in the, no, the spread is actually 81.22 to 81.84. A wide spread is seen, about 60 pips spread is seen. That is why I have taken a technical buy around that of 1.6162 or 63, because 0.8161 is the initial high, and try to take a buy above that. It's a technical trade because if they sustain above that high for more than 30 minutes, you come across euro is in positive net change, CHF is in positive net change, So they are just making a contrarian move during the mid-session to gain levels in the case of Euro CH. Then Eric, do you expect Australian dollar to continue to drop? Yes, I am expecting Australian dollar to drop. Already they have made about 79 pips. The pullback is very, very nominal. And so whenever they make a session, late session time, a small pullback, we can take a sell. And definitely they are expected to make a drop in the case of Australian dollar. And because commodity pairs lead the rally, the night trader, would you please explain the rationale of sell euro? Yeah, the euro initial low was 1.4140 and they just gone above, and so we assumed that they may not sustain above their initial low for more than 30 minutes up to 9:45 GMT. So the next alternative could be they could go up to that of the psychological level and also between this high and the low around 4150. So they may just sustain near that 4150. Some platform may not fill it. To be on the safe side, I kept the order 4149, just one tip short of the psychological level 4150. Hope you are able to understand. So this is how we take the decision. Let us see whether it is working out or not. But still, we are not telling that it will work out 100%. That is why we keep the stop. Because no analysis can give a 100% result. So obviously we need to keep a stop. If you keep a stop, then the opportunity is you may lose 30 pips, but doesn't matter. You will have the equity to take fresh sell position at a higher level. And if you use the hedging, we can keep stop at entry in the hedging and just close it. And in case if they gain some more level, you can book profit in the hedging and then keep another hedging order, trail it down till such time you are able to keep stop at entry in your sell side. That is the advantage of using hedging. And also if you use hedging, you will be able to review the market, waiting for about 1 hour or 2 hours and see how the going is after keeping stop at entry in the hedging. But if you keep stop, the position will be closed. That is the only difference. If the facility is available, you can make use of it. And when the facility is available, try to learn it. So it is something like a person who is used to that of the left-hand drive in the car. In some of the countries, you come across the right-hand drive. And so if he says that I do not know how to drive the car, that's wrong, because he is not used to that of the other side handling of the car. So it is better to learn both so that anywhere in the world he will be able to drive the car. Even though he is a very good expert driver, there are two possibilities, right-hand drive and the left-hand drive. So both, if he is able to maneuver effectively without any confusion, that is how the hedging is. Then pip grabber, please, what is your take on GBP now? GBP, they may probably make a small pullback to that of the initial low, 1.6135, and then make a drop again. Because euro is having a nominal volume nowadays, but reduced volume is seen in most of the currencies. That is why they are making this sort of moves. One day rise, another day drop, and they're all intraday volatility is getting reduced day by day. And also there is envisaged that the platform providers, they are sending the mailers and also requesting all other platform providers clients to join there and deposit even $200, $500. They are willing to deposit bonus, etc. That shows that the trading volume is coming down. Then AL, can you read the chart and orders? You want to know whether I have the capability of reading the charts, sir? Let me explain. I am a statistics professor. I know how to read, but I have found that a lot of limitations, and there are other people who are explaining it. So what is the use of the same is being explained by so many analysts. So I wanted to give a different perception to the market. Hope you are able to understand. It is not that I am not capable of reading the charts or doing the statistical analysis. Then do you still hold the short positions? Do we still hold the short positions? Yeah, you can hold the short positions. By your session, you will be able to take a good profit, but still money management is equally important. See, the anticipation is the drop in the case of Euro and GBP during that of the Euro US session, and before that of the stress test, the outcome, they could make substantial drop in the market, but still you cannot blindly take a chance. Then that leads to gambling. You have to necessarily use the precautions of using a stop or a trailing stop in profit making position to limit the risk. Then Robert, in your management of positions, do you hold them indefinitely until profit is seen in them? I use hedging effectively, sir. I don't take unlimited risk. Even though I have been trading for a long time, I don't take any chance of open positions. I always keep the hedging order to limit the risk by using the hedging related to techniques. And also, see, I have the long-term forecast with me. Suppose in the month of May, they gain the levels, I know that, okay, let me have the sell positions, but in the month of June, I'll try to close it. That sort of understanding is there. So in case if I missed closing a hedging order by certain constraints or any other in-between constraint like a power failure during the market hours, or just I have to attend to other work and things like that, I don't get really bothered. I wait for the right opportunity to close the positions. I don't become impulsive at all. I have been controlling it by doing various exercise, and that is a main strength for my trading. During times they initially move against the frightened small traders. It is not the only question of small traders, sir. You have to keep it in mind. They try to act against the impulsive traders. So impulsive traders, whenever you come across an upward move, immediately they jump into the market aiming at least 10-15 pips, and they say that they are very efficient scalpers. And when you do scalping, you fail to keep stop. Suddenly if they make a very big move against you, you become really caught, because scalpers invariably use big lots beyond their capacity without understanding how much of positions they can hold. And that is why scalpers wipe out the account very frequently when compared to that of the small traders taking very, very small positions at a given time. Then Murli, can you recommend a good broker? No, sir, I do not want to enter into this. Who will not hit my stop? I have no answer for this, sir. M-Drive. On initial slide, it showed and weak beginning false move level was revisited. So, big drop is not anticipated. Yes, they are not. If they are not visited the Monday low and the high, then there is a great chance that there will be a shift in trading zone on the downside. Now it is confirmed that they may revisit 1.3850 in the case of Euro, or probably another 50 to 100 pips downward stopping before making a rise, but not to that level of 1.30 or 1.25. That is ruled out. So this is how we will be able to estimate it. You can just see in this month how far they are dropping it. Then Jack, are you expecting weak beginning falls? That's what I explained. Monday for the upside. So Monday during that of the Japanese session, they made a quick rise. That was a weak beginning falls move according to my estimate, because they have now made the drop today. They are not continuing the rise. Can you use quick idea or talk about gold? Yeah, gold yesterday they made that euphoric rise and they are expected to make a very big drop, and simply say that profit booking during the day. Then Robert, important side note, everyone please. Okay, drink fresh water. Okay. No, I do not take. Okay, no more questions here. So let me go back to that as the problem. One more. Again, since gold is 1548, you are telling gold will lose shine. Yeah, it has gone to 1,593. You are right. Because in a matter of 3 days, they gained nearly about $100 in order to mainly drop it in a very big way in this particular month. Later on, during next week, you'll be able to understand why they made such a big rise. No, because see, I never say that it will stop with 1548. I said that they are doing a big rise and trying to build sell positions and hit the stops of the short sellers and also induce them to turn long. So everybody is anticipating it is going above 1600. Now you see that they had already dropped. How euro should be handled now? Euro is trading around 1.6163 and I had taken a sell around 41.49. So I got a stop around 41.79. Let us see how far they are making a move in this. And in case if they stop me out, then I'll see how they are respecting the high 41.98. Then try to take a sell position there if they are not breaching it. So let me go back to that of the PowerPoint presentation. Any more question? Overrider, but always for a full session or a day. No, basically, Abu Dhabi, I am trying to give a long-term forecast and also a short-term perspective on that, so that we in line with that of the long-term moves, we can take positions and then try to use the hedging or other method to limit the risk. Yeah, I'll show the trades. What's your call on gold? I explained it. One more question. Yeah, I'll show the trading tips now. I focus the camera over that of the what positions I have taken. Hope it is visible now. Okay. Now I got a sell position in euro around 1.4149 and a sell position in the case of euro GBP around 87.84. Currently it is trading around 87.86.89 and euro is trading around 41.59.61. So my stop is 30 pips above. So we have to always take a chance of 30 pips and we can fine tune, and as I kept the limit order, we can wait for the mid session to see how the intermediary level they come and take a sell position also. If you always wait, you will get a better chance to enter into the market, because I had to finish up the webinar in 45 minutes. So I just enter into that. Still, I'll show the result of it during the part 2 of tracking the forex market together webinar. I'll come back by 14 GMT and show the results. In case if GBP is failed, I'll also show that it has become a position and see what happens to that particular trade. And also here in CHF, they have already gone up. I don't think they have given me a chance to enter. And Canadian dollar, no, still they are not given me a chance. So I have only at the moment 2 positions. The rest of the things are limits. So let us see how far it goes. So we will not try to chase the market and try to enter in. And when they do a small pullback, then we will try to enter into that of the Canadian dollar or Swiss franc. Okay. So I'll come back by 14 GMT and review what happens to that of the positions, what I have envisaged, and also review the highs and the lows which are set now during that of the US session, and say how exactly we will be able to a certain extent, predict or read the intentions of the players with regard to the 4 majors and 2 commodity pairs, and also review the crosses from time to time. Thank you one and all. See you by 14 GMT. Thank you.